Thank you for having us. Today we're going to be talking about understanding single audits, some legal and practical tips for CAAs. My name is Savannah Arral. I am a staff attorney at Caplaw, and I'm very pleased to be joined by Troy Rector, who is a shareholder at Clark Nuber. They have really been willing to dive into this and provide the auditor's perspective for this presentation so that you can get both the legal side of things, the framework, the orientation to the statute and the regulations, as well as a little bit more about how this will actually play out in practice when you're in the process of going through or preparing for a single audit. And in Caplaw, these next two slides are just for your reference to be able to see Caplaw's website and what we offer, and the same thing for Clark Nuber as well, just in case you are interested in reaching out to either Troy or I or our organizations for more information about this or anything else that we work on that can be helpful to the Community Action Network. So today, I'm going to take you through an introduction to Subpart F of the Uniform Guidance, which is where most of the legal framework for single audits lives, as well as the Financial Operations and Oversight CSBG Organizational Standards that pertain to the audit process. And then I will hand it over to Troy, who will bring you through an auditor's perspective from single audit objectives in the process to the OMB compliance supplement, reporting requirements and audit findings, and then hopefully at the end we'll have time for questions. Feel free to use the chat as we are going, or if you have a clarifying question, feel free to raise your hand. We're a small enough group. Don't be afraid to interrupt us if something we're saying is a little bit too technical for you to follow along with today.
Yeah, and thanks, Savannah. Look forward to talking with you today on the auditor's perspective. I guess the non-technical term is how the sausage is made when it comes to single audit. So really just kind of going through just what the process is, why or how do auditors do what they do? And what if you do have a finding? We're going to cover, what are some practical steps that you can take as an organization to navigate that. And so, yeah, pleased to be here today.
So we'll jump right into it. Like I said, I'm going to start with an intro to Subpart F of the Uniform Guidance. The basics of single audits come from the statute that's called the Single Audit Act of 1984, which was significantly amended in 1996. It lives at 31 U.S. Code 7501 through 7506. I do not recommend trying to read it. It is quite dense. But gratefully, we have Subpart F of the Uniform Guidance, which fleshes out the requirements of the Single Audit Act and its amendments. Subpart F of the Uniform Guidance, as we've talked about before with Community Action Network, is a regulatory structure. The Uniform Guidance in general is a regulatory structure. And Subpart F is particularly it's the audit requirements part that sets out standards for obtaining consistency and uniformity for the audit of non-federal entities that expend federal awards, including community action agencies. Some parts of the Uniform Guidance, I don't want to get too much into this, but some parts of the Uniform Guidance may apply or not apply to certain federal funds, depending on what they are, where they come from, how they flow down to an organization. But generally, the Subpart F requirements apply to block grants, which includes CSBG, and they apply to both subrecipients and recipients of federal funds. So the whole process of receiving a block grant in CSBG. Taking a slight step back, Caplaw actually very recently did a webinar on the proposed changes to the Uniform Guidance that were announced by the Office of Management and Budget. There is a recording of this webinar as well as slides and a transcript that's available in our resource library. I can send the link around if that's useful to folks. But I did want, just in case folks have questions about this, I'm not going to dive very deeply into this, but in regards to Subpart F, the NPRM, the Notice of Proposed Rulemaking, does proposed to remove two very particular things from Subpart F that I wanted to highlight, which is first the requirement for the compliance supplement, which Troy is going to cover, to be updated by OMB annually. So removing the requirement for OMB to actually do this update on a yearly basis. They could do it more or less. That is actually a question that we had for OMB. And then the NPRM also proposes to remove references to the Green Book, which is the standards for internal controls in the federal government that's issued by the Comptroller General, and the COSO frameworks as recommended internal control systems. I will point out that this does not mean that folks cannot use those internal control systems, and that's very clear in the notice of proposed rulemaking, but specific references to those particular frameworks are proposed to be removed from Subpart F. Now jumping back in to the single audit process, I am curious who we are talking to today about single audits. Does anyone want to unmute, introduce themselves, and let me know if they know the difference between a financial statements audit and a single audit? Don't be shy. I will not be upset if you don't know. I mostly just want people to introduce themselves.
I guess I will. Good morning. My name's
Good
Shannon.
morning.
I'm from Inumano Advocates for Community Action, located in Bishop, California. I'm the fiscal manager. I know obviously what a fiscal or financial statements audit means. As far as a single audit, my guess would be a single audit in regards to one particular grant.
Okay, that's a really good thought, and that makes complete sense of why you would think that. Can you give me a definition for a financial statements audit?
The financial statements, either monthly and or yearly, which compose of everything. Like, for example, my organization, we do food pantry, we do LIHEAP and CSBG and all that good stuff. We no longer do schools. We're not doing childcare or preschools anymore. So it would, but we do have, we're not doing housing anymore, but we do have two low income apartment buildings that we're still taking care of. So it would encompass everything altogether, I guess.
Awesome. Yeah.
Like what's on the screen, balance sheet, income
Yes.
statement, cash flow, all of that.
All of those documents that honestly to a lawyer are very, very scary. Don't hand me income sheets. I will, or income statements. I maybe will cry. But financial statements audits are a review, very generally, they're a review of if the balance sheet, income statements, cash flow data, your financial statements are fair and accurate. And these happen, like you said, on a very regular basis, and they're often requested for things like foundation reporting. They can be required by state corporate law. Banks will sometimes ask for these. And the difference between a financial statements audit and a single audit is that a single audit is a review of financial statements plus your internal controls, your compliance with federal award program rules, and it's required by the uniform guidance if a certain threshold is met. So what we're going to be talking about today is that single audit. So it's the financial statements plus all of these other things, and it lives within and is defined by the uniform guidance as a result of your organization receiving federal funds.
And we do have a CPA, well, we have to seek new ones every few years, but we have a CPA that comes in and does a full mandatory audit for us each fall to make sure that just covering everything what you just said, making sure
Yes.
that we dot all the I's and cross all the T's and that we're in full compliance.
Yes, and sometimes I do hear CAAs refer to the single audit as the mandatory audit, so I would not be surprised if what you're describing is in fact your single audit. But thank you for speaking up. I really appreciate it.
You're welcome.
So when I say the threshold for a single audit in the uniform guidance, the uniform guidance says that a CAA or any other federal entity or non-federal entity that expends $1 million or more in federal funds in a fiscal year has to have either a single or a program-specific audit. I'm not going to go into program-specific audits in depth in any way today, but I will tell you that they are covered by 2 CFR 200.501C. If you're interested, I'm more than happy to talk about those particular aspects of the uniform guidance. But today, single audits. The basic requirements of this single audit is that it must be conducted in accordance with what are called I think it's GAGAS, Generally Accepted Government Auditing Standards, aka the Yellow Book. And then I would also point out that even if your organization doesn't meet the threshold in the uniform guidance for a single audit, CAA records still have to be available for review or audit by both federal agencies and pass-through entities. So regardless of whether or not you expend $1 million in federal funds in a fiscal year, there are still requirements around what you need to be able to show federal agencies and pass-through entities about your organization's compliance. Another big thing that Subpart F of the Uniform Guidance talks about is this idea of an oversight agency. And oversight agencies have certain responsibilities in regard to ensuring that audits are done by CAAs and other non-federal entities that get federal funds. So there's two words that I want you to know. It's okay if you don't remember them. The citations are here to the Uniform Guidance for you to go and look back at. But a CAA that expends more than $50 million a year in federal funds has to have a cognizant agency for audit. And that is the agency that provides the largest amount of direct funding to that CAA. We often see this in the HUD context with housing and public housing authorities. Otherwise, if you don't expend $50 million or more in a year in federal funds, you have an oversight agency for audit. And that is the federal agency that provides the predominant amount of direct funding. So just to get some terminology down here. CAAs, as the auditee for a single audit, have certain responsibilities that are very clearly laid out in Subpart F. The first one is, of course, to arrange for the audit, meaning to select the auditor who's going to actually do that audit, to ensure that the audit is, in fact, properly performed and submitted, which I'm going to talk about in just a second, to prepare financial statements that go into that audit, including the schedule of expenditures for federal awards, to promptly follow up and take corrective action on any audit findings, which, as Troy said, he will go into more in depth, and then to provide the auditor access to things like personnel, accounts, books, records, anything that that auditor needs in order to be able to properly perform that single audit. And I will say Subpart F is quite detailed on these matters. So I've cited here, this is just generally the auditee's responsibilities, but if you're curious about some of the particulars, feel free to go in and Subpart F is very readable for a non-lawyer. Or non-accountant. So those citations should be able to give you a better understanding of the very particular things that the Uniform Guidance is requiring of the auditee in a single audit. One important thing that I wanted to get across is that the Uniform Guidance lays out a very particular timeline for submitting the single audit, which is that the audit reporting package has to be submitted by the earlier of either 30 calendar days, I should say, after a CAA receives an auditor's reports or 9 months after the end of the audit period. And it's so specific that they even have it's due on the next business day if that due date falls on a Saturday, Sunday, or a federal holiday. There is some information out there about the ability for a cognizant or oversight agency for audit to authorize extensions. And I'm quoting from Subpart F here, when the 9-month time frame would place an undue burden on the auditee. But we highly recommend not relying on that. Really, the timeline is clear in the Uniform Guidance. And you should mark all of those dates and understand what they are in your calendar. And your auditor can probably help you understand them as well. And then also I will say that you do have to keep the documents related to your single audit, keep the reporting package on file for 3 years from the date of submission to the Federal Audit Clearinghouse, the FAC. Paying for a single audit, CAPLA gets a decent amount of questions about this. The Uniform Guidance answers this question, which is that a quote, reasonably proportionate share of the costs of a single audit are an allowable cost in use of your federal funds. The costs of a financial statements audit, however, are not allowable. And the cost of a single audit, so if you did a single audit, when your CAA was below the Subpart F threshold, aka doesn't expend $1 million or more in federal funds in a fiscal year, those costs would also not be allowable. So basically, if you have to do a single audit, because the Uniform Guidance says so, because the Single Audit Act says so, then those costs are allowable. I'll also point out this is kind of semi-related, but we get this question sometimes in tandem. The uniform guidance also does talk about professional services costs for things like attorneys, financial consultants, and there are particular rules about when the costs of those professional services are allowable, and it's basically when they're reasonable, and then there's a whole list of other criteria that they have to meet. So not treated in the same way as the cost of the single audit, but the uniform guidance does talk about both of these things that we get asked about often in the same breath. And now that I've kind of hopefully oriented you to Subpart F of the Uniform Guidance, I wanted to very quickly go over the fact that the CSBG Organizational Standards, which almost every one of us is going to be familiar with from the auditing process, from the monitoring process, excuse me, also talk about the single audit and audits and the importance of audits in ensuring that your CAA is compliant with all of the rules and regulations that they need to be. Very, very basically, the organizational standards are a framework for evaluating the operational capacity of a CAA in areas critical to community action. There's a bunch of history about these that I could go into, but they all come from the fact that CSBG is a block grant and states are responsible for the oversight of CAAs. And the Office of Community Services decided that we needed a general framework for doing monitoring that set everybody to the same standard. There are 58 standards for private nonprofit CAAs and 50 for public CAAs. There are 3 categories. Today we are going to be living in the category operations and accountability. And within those 3 categories, there are 9 subcategories, and we are going to be living in financial operations and oversight. CAPLA does have an organizational standards guide. It's an e-resource that's available on our website, and it was very recently updated with some information about the history, applicability, legal framework of the org standards, if anyone is curious. So I'm kind of going to breeze through these, but again, you can go to our org standards resource on our on the resource library and look at these. But the org standard 8.1 does require that both nonprofit and public CAAs get an annual audit that is completed in accordance with. It's written out very long here, but the uniform guidance. So it's done in accordance with the uniform guidance, and also in accordance with state audit thresholds. So if your state does have lower audit thresholds, your accountant or your auditor should be able to talk with you about those as well. Standard 8.2 requires that the board and the organization address any findings from the prior year's annual audit. So not only do you have to keep getting an audit, you have to fix the things that the audit found or address the things that the audit pointed out to the extent that your board deems it appropriate. And again, this is for both nonprofit and public CAAs. For public CAAs, it is specifically about audit requirements related to CSBG funding, and that is because the org standards are, in fact, the CSBG organizational standards, so they're specific to the uses of your CSBG funds. 8.3, Standard 8.3 requires that the auditor present the audits to the governing board. This is very specific. There should be a moment where the auditor gets to go to your board meeting and present the audit to the tripartite board, and that there is proof that the board formally receives and accepts that audit. So somewhere in your meeting minutes, somewhere in your board resolutions and documentation, there should be proof that the board has both received the audit and accepted the audit in a formal way. For public CAs, slightly less formal language, the board just has to be notified of findings related to CSBG funding. But again, that should be marked somewhere in your meeting minutes. Standard 8.7 is backing up just slightly. This isn't exactly about the audit, but it is about the things that go into the audit. So Standard 8.7 requires that the board receive financial reports for nonprofit CAAs each regular meeting, and the same for public CAAs. And that includes organization-wide reports on revenue and expenditures and balance sheets. For public CAAs, this is subject to what's allowed by local government procedures, but still important, the CSBG organizational standards require that your board is regularly informed of and given the financial statements that will feed into your single audit. And if maybe you're not super familiar or comfortable with financial statements, CAPLA again has a resource, a chapter of our Tools for Top-Notch CAAs guide that is called Getting the Most Out of Your Financial Statements, that kind of goes through the basics of financial statements. It is currently under construction. We are hoping in the next month or so to release an updated version of it. You see it has our old branding on it, but still very, very good information and a really great place to start if you are maybe a little bit worried about your own understanding of financial statements, or it was a surprise to you that one of the org standards requires the presentation of financial statements to your board on a regular basis. And with that, I am going to turn it over to Troy. Oh, yes, nailed the timing. To leave plenty of time for him to really go through the practicalities, the auditor's perspective, and give you much more real information than I can tell you just talking about Subpart F of the Uniform Guidance. So take it away, Troy.
Great. Great. Thank you, Savannah. So it's like Savannah mentioned, working through kind of the auditor's perspective, and in some ways kind of taking a step back and looking at more of a holistic overview of the single audit. There are a couple of slides when I get to the OMB compliance supplement where I will be kind of circling back to the CSBG specific items. But wanted to just provide a perspective on, what's the scope of the single audit, what's involved when we're testing things, what do we need to report as a finding. So let's get started. In terms of who needs a single audit, I know Savannah covered this. In terms of the $1 million threshold, so that is based on your fiscal year. So whatever fiscal year you're operating in, that's kind of the bookends that we're looking at. And it's $1 million of expenditures. So actually, I have a couple of slides on actually what is a federal award or subaward, and what do you use to determine expenditures. But that's really what we're looking at, the threshold when the single audit is required. Savannah had mentioned the program-specific audit. The program-specific audit is only available when your organization receives federal assistance through just one assistance listing number. So certainly with CAP agencies, probably doesn't happen too often. We saw this a lot like with COVID, when maybe an entity that hadn't received federal funding before now receives federal funding. To where if they only receive assistance through one assistance listing number, they can have a program-specific audit. And the benefit of a program-specific audit is not requiring to have a financial statement audit. And so certainly during COVID, and sometimes you may be working with a recipient where you're passing funds through to them, and they've never had a financial statement audit before. And now they've exceeded that threshold because of the award that you provided them. When we're working through an audit, a first-time single audit, a first-time financial statement audit, there's actually a lot more work working through a financial statement audit for the first time, from an entity getting ready for one. And so there might be an efficiency gain there. But again, the entity will only have had assistance through one assistance listing number. The audit must be conducted annually whenever you do exceed that threshold. Some organizations are well above the threshold. Other organizations will exceed the threshold one year, but not the other. And as Savannah had mentioned, for the cost to be allowable, you are required, you do have to be over that threshold in order to charge that cost through. If you look at the next slide, so what is a federal award? When we talk about federal assistance, it can come from a number of different sources. First, grants, kind of the grants, sub-grants. That's probably the most common way that we see federal assistance come into an organization and be subject to a single audit. But maybe on the research and development side, you may have contracts issued under the Federal Acquisition Regulation, so more of a commercial contract. And the Uniform Guidance states the only contract subject to the Federal Acquisition Regulation that should not go onto the Federal Award Schedule are firm fixed price contracts. Everything else is subject to audit. We have compacts with Indian tribes, loans or loan guarantees. And so certainly if you have affordable housing organizations, when you have a federally funded loan, oftentimes that loan is on your books for like what, 30 or 40 years. And we're going to get to the basis of determining what's a federal expenditure. But if after year one, when you receive the funds and expended those funds, if that loan has continuing compliance requirements, that's subject to audit. That stays on your federal award schedule. And so I have clients that, because of loans they received 20 years ago that have, let's say, low income tenant requirements, that stays on their CFA and is the reason why they're required to have a single audit. The other three categories there: interest subsidies, endowment funds, free rent, not as much. The non-cash assistance, commodities. So it's probably speak to a number of folks here. Food commodities that are received through the USDA go on the CFA. And actually, I'm going to come back to food commodities in a couple of slides in terms of, okay, I understand food commodities go onto the CFA, but when do they go onto the CFA? How do we value that? So I'll come back to that. If we look at the next slide, there are several instances where, let's say you do have a federally funded agreement. There are a couple of instances where, even though it's federally funded, it may not be subject to audit. It may not go on to your federal award schedule. The first category is if it's Medicare or Medicaid payments for patient care to individuals. So that's primarily when you're providing patient care services and you're developing your diagnosis codes, you're billing through CPT codes, you're providing patient care. That is excluded from the single audits. But we have Medicaid funds a lot more than just patient care in the community, which is subject to the single audits. I know sometimes what's patient care, what isn't, that's kind of, we can get an interpretation there, but that's an exclusion. The other exclusion is if you are considered a contractor per the uniform guidance. Sometimes I'll see subawards that come through and there's a question of, is the entity, so literally on the face sheet it says entity is subject to the single audit, or is the entity considered a subrecipient? And if the answer is no, that means you're a contractor and the funding or the assistance for that award is not subject to the single audit. We've noted a couple of items here in terms of, what's a subrecipient? What's a contractor? The pass-through entity is the one. So the funder, the grantor, is the one that makes that determination. It is on an agreement by agreement basis. And particularly with subawards, it may not always be clear if you're a contractor or a subrecipient per the uniform guidance. You could have an agreement that says contract. You could have a contract that names you as a contractor, but the funder still sees you as a subrecipient. So kind of, sometimes it does require follow-up with the pass-through entity to determine if they've determined you to be a subrecipient or a contractor. What I'd recommend there is first kind of going through and assessing what do you think? So when you go to that funder and ask, you're kind of saying, well, we think we're a subrecipient, just wanted to clarify with you. But also, when you ask that question, making sure that you're putting in there, we're wanting to make this determination in accordance with the uniform guidance, 2 CFR 200.331, because who you're asking the question to, they may not even know this determination. And they're like, well, yeah, you're a contractor. Look, see, the agreement says you're a contractor, but we're asking the question for the uniform guidance purposes. So if we look at the next slide, in terms of when the activity occurs. And so, okay, we have this subaward agreement. It indicates that it has federal assistance. We know that we're a subrecipient. I was just awarded, $100,000. When does this actually go on to the federal award schedule? When is this subject to the single audit? So, when do I include all or a portion of the $100,000 in my annual federal award schedule? So The underlying criteria or requirement, it's when the compliance occurs. So the underlying event occurs that establishes the requirement to comply. Because a vast majority federally funded awards and subawards are cost reimbursement based, the amount that is subject to single audit and goes onto the federal award schedule is when you have incurred that cost. Not when you submitted it for reimbursement or reported that cost, it's when you have incurred that allowable cost. When you're a pass-through entity and you're passing funds through to subrecipients, the amount that goes onto your award schedule is not the period that the subrecipient incurred the cost. It's when you have reviewed that cost, determined it to be allowable, and have dispersed that cost to the subrecipient. So for example, let's say you're a calendar year end entity, your end is December 31st, and in February, the subrecipient sends you an invoice saying, okay, here's my invoice for the last quarter of this last year. The subrecipient, that is when, their expenses are incurred. That's what they would report on their federal award schedule. But for you as a pass-through entity, that really isn't an expense to you until you've reviewed that invoice and have approved it for disbursements. And so in that case, even though in February, the subrecipient is billing you for last year's cost, that would be a February 2026 expenditure that would go into your federal award schedule. So I know that can kind of get tricky with entities, but that is a little bit of a nuance. In terms of loans and loan guarantees, sorry, Savannah, I just had a couple of items here. On the loans and loan guarantees, so any new loans, any federally funded loans, when you expend those funds under that loan, or sometimes you may receive the loan funds in advance, it goes on to your CFA. So then the question is, well, what about subsequent periods? In subsequent periods, if there are continuing compliance requirements, which almost every loan has a continuing compliance requirement of some type, it goes onto your federal award schedule. And the amount that goes onto your federal award schedule is the beginning balance plus any advances that you'd received. And then I promised to get back to the commodities. And so the amount of USDA commodities that are reported on your federal award schedule are when those commodities are distributed based on the USDA values. Sometimes organizations get confused that, okay, we received commodities yesterday from the USDA, we had them in our food bank. Do those go into the award schedule? They do once you've distributed them. So again, it's the value of commodities distributed that would go onto your federal award schedule. Okay, with the next slide. Okay, so looking at the single audit objectives, if we think about a financial statement audit, like Savannah was mentioning, our requirements are to provide an opinion on whether the financial statements materially comply with the accounting standards. In a single audit, we're providing the same type of opinion, but the subject matter is just different. So in a single audit, we're providing an opinion on whether you comply with the applicable material compliance requirements that apply to each of the major programs tested. And so I'm going to get to this in subsequent slides, but the thought that I'd like to put here is, okay, you put together your award schedule that includes all your federally funded programs and the expenditures. The takeaway is that a single audit is not going to audit every one of the grants and contracts on that award schedule. We actually go through a process of selecting a major program that we then perform a detailed testing on and provide the opinion. Like a financial statement audit, we are required to understand the controls, obtain an understanding of those controls, assess control risk, We do not provide any opinion on internal controls, but the standards do say, so when we get to the findings slider, we're going to see, but if there are any deficiency in the controls that come to our attention that we think warrants the attention of the board, those charged with governance, we are required to report that as a finding. So that's where the internal controls come into the single audit. Okay, if we look at the next slide, the single audit is a process. For most organizations, your single audit likely happens at the same time the financial statement audit does. If the testing doesn't happen at the same time, the reports are usually issued at the same time. But they really are two entirely different audits, two entirely different processes that we go about in auditing. The subject matter is different. And so the single audits, kind of the high-level overview of the process is first determining federal award expenditures. So throughout the year, hopefully, in your grants management system, you are identifying what are your federally funded awards and subawards. So then you're getting close to year end, or maybe even well before, and you're identifying, okay, are we over the threshold here? For some organizations, they have to go all the way through year end to see if they are. For other organizations, they're like, no, we're going to be over the single audit. So then, identify the auditor that you're going to use to perform the single audit. And what you'll find is, we have a large number of CPAs out there in the country. You have a subset that work with nonprofits and they do audits for nonprofits. But then you have a further subset that do single audits. And there's a lot of capacity constraints with CPA firms, and I know it can sometimes be a challenge for organizations to find an auditor that does single audits. But anyways, you find your auditor, you prepare your schedule of expenditures of federal awards, which we're going to look at what the requirements are there. So those three sections are kind of the auditee. That's what you're doing. And then the auditor takes it from there. We determine the major programs that we're going to test. We test those programs, and then we report on the results of our audit testing. Okay, to speak about the schedule of expenditures of federal awards, in other words, this is kind of the financial statement of the single audit. The uniform guidance in Subpart F identifies what the required contents are to be in that schedule. That's the federal program name, assistance listing number, the total amount provided to subrecipients, total expenditures. If there's COVID funding, that's required to go on a separate line. And the last bullet point here is probably the most important is, so when you are preparing the schedule of your federally funded programs, which of your grants and contracts are federally funded, what was the amount of federal assistance that was expended during the year? Auditors are relying on that for the single audit, and we're required to perform testing over that schedule. So, we're testing awards that are on the schedule, looking at underlying agreements to see, okay, are these federally funded awards? We're looking at the assistance amounts that are reported to make sure that those are correct. And then we go in, we select a sample of grants and contracts that you received during the year that are not on the schedule, testing for completeness. And that is probably the most common finding that we have on the CEPA, is identifying through our testing that, there's actually a federally funded grant that wasn't caught in the grants management system, it wasn't included in our federal award schedule. And depending upon the pervasiveness and the dollar amount, that could actually be a finding. So we are required to report on any misstatements that we have on the CEPA. So certainly important from a grants management perspective to be able to identify what are your federally funded awards. Okay, so then the next slide, that just shows what a CEPA looks like. I know for a lot of our clients, we get the information and then we put it into this neat format. But the organization it is your responsibility to identify your federally funded awards and identify the data here, where your auditor might put it into this neat format. Okay, and then the major program determination. Internally, we have, so our basic training for how an auditor goes through the major program determination is 2 hours. So certainly not going to cover the details of that. It's based on the amount of expenditures in the current year, whether the program has been audited in the past year or two, what were the results of the audits. And then ultimately, the major programs that we select have to exceed a certain percentage of federal expenditures. So that's something that the auditor is going to identify upfront, and that's really going to determine the work that's going to be involved. Auditing one major program versus 4 are 2 totally different sets of hours or budgeted hours in terms of what's going to be required of the auditor. So we select our major program, and then we get into the actual auditing. And so when we look at how we audit the major program, we first obtain the grant agreements. We need to understand this program we're auditing. Grant agreements, inquiries with the program staff. Okay, what's the objective of the grant? What did you spend funds on? So a lot of times, what we test in this single audit is based on what did you expend funds for. So obviously, you have allowable cost, but did you have procurements? Did you procure contracts or supplies where maybe we're going to test procurement? Did you have subrecipients? Did you expend funds on subrecipients during the year where maybe we're going to test subrecipient monitoring? So we identify the applicable compliance requirements, the program activity, and then we go forth and we test. And a vast majority of the testing that we do in a single audit, which is kind of different than a financial statement audit, is a lot of sampling. We just do a lot of sampling, test a lot of samples. And what the standards say is so let's say you had 1,000 transactions, 1,000 allowable cost transactions. We come in, and based on our sampling tables that we use, we may select a sample of 60 or 40. But what the standard says is, we select that sample expecting 0 exceptions or deviations. So that's kind of saying that in a single audit, there is really little room for error. And so when we perform our sample testing, if we have one instance of non-compliance, management's going to have to determine what was the root cause analysis of this one exception. We're going to have to determine what the magnitude of the error is. So we use sampling and with very little room for error. In terms of a couple of items on the next slide, what we use when we're designing our testing is the compliance supplement. This is primarily used by the auditors, but just wanted to go over a couple of points to identify how this can be helpful for you as an auditee. It is about 2,000 pages, so definitely want to kind of give direction on where to go. So here's the link where you can find the compliance supplement. It is issued annually, and it's usually starting with June year ends. And so if you're a June 30, 2026 year end entity, the 2026 compliance supplement has not been issued yet. And so OMB is still working on that, and we have no idea when it's going to be issued. We know the 2025 compliance supplement was issued late, which meant that the audits ended up being issued late because the guidance that's given to auditors is you can maybe plan based on a draft compliance supplement, but you can't issue an audit until the compliance supplement is issued. So if you look at the next slide, some table of contents, what would probably be most helpful for your organization is number 1, part 3, the compliance requirement. So the 12 points of compliance, that's allowable cost, cash management, procurement, those key requirements that you comply with. Part 3 goes through each of those, provides kind of an overview of what the requirement is, and then it actually provides suggested audit procedures. So it gives you an idea of how we're going to approach the audit. So let's say you're passing funds through to subrecipients for the first time, and you're like, yep, I know the auditors are going to look at that. Well, you can go to part 3, subrecipient monitoring, and see exactly what we're going to test as a part of that. So, and then part 4 is where the federal agency program specific requirements and guidance are. And if we go to the next slide, just to take a quick minute. So so each federal agency has their part in part 4. They don't issue it for every federal program, but they do for the large ones. So CSBG, obviously a large program. And so a couple of items to note here is first on the subject to audit. And so this is where the federal agency says, these are the compliance requirements that we want you to focus on in the single audit. So for CSBG, even if you had material procurements, for example, in that column I, it says subject to audit, no, so we're not going to audit that. So one of the things to look at from a single audit standpoint is, okay, new compliance supplement comes out, whatever, but look at that for your programs, because if that subject to audit changes, even though you have a program that's been audited every year, if the federal agency changes that subject to audit designation, the auditors may be looking at something this year that they didn't last year because that subject audit has changed. So take a look at that. And then with the remaining slide, if we go on to the next slide, this just provides, really, this is the auditor's cheat sheet to understand CSBG. And so what the compliance supplement does, okay, we want you to test allowable activities. So actually, what are allowable activities? So this is just giving the auditor more information on, what to test when we're testing that, allowable activities there. We go on to the next slide. Actually, the next couple of slides just have more of an overview. So obviously, if you're administering CSBG, you're going to look at this section. You're like, there's a lot more to it than what's in the compliance supplement in terms of what you have to comply with. But again, it's that subject to audit part that is probably the most helpful. Okay, and the last slide I have on the OMB compliance supplement. The next slide are just some other advisories. Appendix, so when the new compliance supplement comes out, the first part I always go to is Appendix 7, other audit advisories. And then the next one is Appendix 5, just to show where the changes are in the compliance supplement. It isn't entirely complete, but it kind of gives you an idea. So if there were some changes as subject to audit for CSBG, in theory, it should be listed in Appendix 5. So if we look at the next slide, in terms of audit or reporting, we look at what our responsibility is versus what the auditee's responsibility is in terms of audit reporting. And so essentially, we report the findings, but it is the auditee's responsibility to draft a corrective action plan for that finding. So we're gonna cover that here. And then ultimately the submission and certification of the single audit to the Federal Audit Clearinghouse via the data collection form. So that's how the audit is submitted. Okay, we have the schedule of findings and question costs, which is kind of the summary overview, the audit results, identifying, okay, do we have findings? Do we not? Are you a low risk auditee? Are you not? Look at the next slide. So this identifies what our responsibilities are for reporting findings, the different types of findings that we may need to report. That includes known or likely question cost over $25,000. So I literally had a $25 million major program that we had question costs of $50,000, but because it was over $25,000, we were required to report that. But it includes internal control related findings, material noncompliance. So this identifies what is required to be reported as a finding, and it is based on auditor judgments. So, what's a significant deficiency? What's reported as a finding? What isn't? Ultimately, that's up to auditor judgments. And so on the next slide, when we do report a finding, There are required elements. Again, the auditor is going to draft that. But to look at what's kind of within your organization's circle of control, what if I do have a finding? So, the auditor is going to, when there is non-compliance, the auditor is going to be looking to you to determine, what happened here? What's the root cause analysis? What's the magnitude? So they selected one allowable cost item that didn't have a receipt. How does that play out on all the other items in that population? So they're going to be looking to you to determine the root cause analysis, review the written finding to ensure that that includes, that the references are correct, prepare. So when we look at a finding, what you're trying to agree to is what is the requirement and did you comply? So if you don't agree that the auditor understands what the requirement is, you may disagree with that. If the auditor is saying that you didn't comply and you're like, no, we did comply, you might disagree with that. But in terms of, you're like, yeah, we know this is a requirement. We know we didn't comply, but we don't think it should be a finding. Well, again, it's kind of up to auditor judgment in terms of what goes in and what doesn't. This identifies kind of the process that goes through. So the auditor just reports the finding, the funder takes it from there. So the auditor may have a question cost, but they are not determining improper payment. So the funder determines kind of, what happens from there. Okay, and then I'll be wrapping it up here shortly. So you are required to draft a corrective action plan. The required elements are their finding reference number, the name and contact information from your organization in terms of who's going to be responsible for corrective action, anticipated completion date, and the corrective action plan. So really making sure that you're committing to a plan that you can commit to, and providing sufficient detail that gives the grantor knowledge of, okay, do we agree with the finding or not? And then what's our plan? How are we going to remedy this finding? So ensuring that it's detailed enough to where it identifies the plan and it's something that the funder can follow back up at some later point. Okay. The summary schedule of prior audit findings, that's required to be completed. If there are prior findings in terms of was it corrected, was it not? I'll kind of leave it at that. And then the next slide, the data collection form, the auditor usually prepares that, but the auditee is required to certify and submit. So when Savannah mentioned the 30-day or the 9-month requirements, it requires the final auditee pressing the button and submitting. So making sure that's done. Because when we talk about the low risk auditee determination, if you didn't click the button when you're supposed to, then ultimately it's going to be on the auditee. Of course, the auditor kind of has an egg on their face too, but ultimately the repercussion comes to the auditee.
And Troy, we do have a question on this topic. Is the auditor required to check to see if the auditee submitted the report to the FAC on time? And what additional requirement or work is required when an audit is not a low risk auditee?
Yep. So while the audit is being submitted, the auditor is not required to verify that the auditee click the button and submit it. But I know for Clark Newber, we do have it as a required work paper in our work paper. So we do verify. But what the auditor is required to do is, if I'm planning a single audit for 2026, your low risk auditee status depends on the results of the last 2 audits. So what we're looking at is, did you actually have a single audit in one of the last 2 years? Was it submitted timely? So that's key criteria there. What we're then looking for is, in the past 2 years, was there a material weakness related to the financial statements? So did you have a material audit finding weakness on the financial statements, a modified opinion on the financial statements? And then for did you have a material weakness for non-compliance on the Type A program over the last 2 years? So it's really, what takes you out of that low risk auditee determination is if you didn't have a single audit in one of the last 2 years, or if you had a material weakness or material non-compliance. And I would say of the single audit findings that I see, that I issue, are the less severe, more the significant deficiency. So, that is an audit requirement. It goes in the report, you draft a corrective action plan, but significant deficiencies do not preclude you from being considered a low risk auditee. So, all right. And then we just have key considerations here for a successful single audit. So it really it takes infrastructure building, putting the systems, policies, and procedures in place, the technical know-how, and ongoing training and monitoring. So it's one thing to have good systems in place, good policies, procedures, but then we all know then people have to follow those policies, procedures, and systems. Then we have to monitor that. So it takes a lot in order to comply, utilizing your auditor and other resources like Savannah and her group as resources throughout the year. None of us know everything. And so we really have to rely on training and other folks that are in the know, but also recognizing that accepting federal awards and managing federal awards does come with a high degree of responsibility. As Savannah it's probably what's covered in the proposed changes to the uniform guidance. There were heightened language around terminations of awards for non-compliance. So what we may see in future versions of the uniform guidance is just more focused on, in order to continue receiving this grant, you need to comply. So.
And then I think we have just a couple minutes left for questions. I didn't see any more in the chat, but if anyone wants to unmute and ask or drop something in the chat, we can try to answer. And if not, somebody did ask about whether or not I could share. I think it was the link to the OMB compliance supplement in the chat. And don't worry, we will be following up with the slides and the links. We will send them to Aurora so that she can distribute them to everybody. And then, Troy, I think this one is for you. What is the contact information from your firm for invitation to submit an audit RFP? Is that on the slide, the fourth slide in the deck that you put in here?
Oh, that is a great question. What I will go ahead and do, probably the easiest way, I will put my email address. So any questions on the audit, or if there's additional guidance or just questions that you have, like Savannah, that's what we enjoy doing, is answering questions and helping organizations. So feel free to spend any questions. So
this is great. Oh, go ahead.
So I don't know if we have a couple of minutes left, maybe providing a nuanced single audit alert. Okay. So one of the things that's in the proposed, around FAFATA reporting, the Federal Funding Accountability and Transparency Act. So if you are a prime recipient, meaning you have a prime award and you're entering into subawards over $30,000, you have the responsibility to complete FAFATA reporting. The proposed uniform guidance actually gives lack of FAFATA reporting non-compliance as an example of why an award may be terminated. But in the 2026 compliance supplements, reporting for some programs was not always subject to audit. So even though you may have been required to do FAFATA reporting, auditors may not have tested it. But one of the changes that we're expecting in the 2026 compliance supplement is that OMB is going to require us to always test FAFATA reporting. So I don't know, we had a couple minutes left. That was something that was on my mind, because we do have, when we test FAFATA reporting, a higher level of non-compliance. organizations just not knowing the requirement was there, or not having the systems in place to make sure that every subaward they enter is entered timely. Because that's the other thing we're testing for is timeliness. So I don't know. Hopefully that was helpful, but
I learned something, so that's helpful for me. But yes, thank you so much. Thank you, Troy. Thank you, Aurora, for inviting us, and thank you for everybody for joining and anyone who's going to view the recording. Like I said, I'll follow up with slides and links to make sure that those all get out there, but you can always feel free to reach out to CapLaw or to Troy and anyone else at Clark Newber to ask any questions that you might have not wanted to ask here today. So thank you again for letting us join.